first. Prakarsh, for a discount brokerage like yours, what will be the impact of STT hike on your business, the industry and your volumes in particular?
I think the impact of the increase in STT will be limited. It will be limited to the small and retail investors who come with less capital, and any change in the costs have an impact on their trading strategy or their profitability. So as far as small retail investors are concerned, yes, there will be an impact. On the large retail traders who are mostly sellers of the option, there I see a very limited impact.
Okay, Prakarsh, thank you for your take there. We'll come back to you, but we will get in Chandan as well in the conversation. Chandan, that's been a big hike. What are you making of this as an industry impact and on brokerages as well?
Thank you so much. Thanks for having me. So in the recent amendment, Finance Ministry has hiked the STT on sell on options and future by 25%. So sentiment-wise, it's negative, but this is on sell on options. So no worry about the retail people who are buying the options. But those who are trading on the high frequency trade, algos, and trade in the multiple time in the scalping, going to hit the yield significantly as transaction tax has increased by 25%. However, this is negative for immediate point of view, but I don't think that this is going to affect much for the retail and the small trader. To understand this STT, I'll just give two examples so that viewer can understand it very well. First thing we keep in mind that when we sell the options, and for sale of option, STT only charges on the premium. So let's say for an example, Nifty is trading at 17,000. If I sell 17,000, call it 100 rupees, my premium inflow will be around 5,000 rupees. So STT will be chargeable on that premium inflow. So right now, previous to this amendment, the STT cost was 2.5 rupees if I sell entire one lot of 100 rupees strike call. But now it will be 3.12 for one lot. Now for future, if I sell one lot of Nifty future, STT is 0.01%, that is 85 rupees in the entire one lot. Now after these changes, it is going to 0.015%. So that will increase from 85 to 106 rupees. So there is slight change in STT, but this is negative for the people who are high frequency trader, those who are trading in the algos and the big side, but not much negative for the people who are trading in the less capital and less amount in the market.
Okay, so the high frequency traders are the ones who are probably going to see the maximum amount of impact. Chandan, thanks very much for that. Prakarsh, coming to you then, the NSE board is going to be rolling back 4% transaction charges in cash equity market and the equity derivative segments with effect the 1st of April. What will the impact be of that particular move?
I think it would have been a double whammy if both STT is going up and also NSE is increasing the transaction charges. So I think it is NSE has rolled back because anyways there will be an impact on the volumes because of STT increase. So I think it is a bit of savior where the transaction charges are not increasing. So a good for retail investors there, but that was minuscule. That was just 4-5% of increase. But here the increase. But here the 25% increase is on a higher side.
All right, so the 25% increase is a bigger worry than the boost that has come in from the NSE rolling back those things. But, Chandan, you said that HFT traders will get impacted. Just wanted to know from a macro standpoint, what proportion of the overall volumes are generated by these HFT traders? Would you have any sense?
So we have done the entire study on the derivatives market. That market is continuously growing on year-on-year or quarter-on-quarter basis. The regulatory looking to discourage much trading for the retail participants. But if you look at the entire segment, almost 40 to 45% trading is being done by the algos and the delta hedging. So their business impact is going to be hamper a lot. So I think you can understand at least 1/3 or more than that are the high frequency trader. Their yield is going to decline because of the 25% increase in STT. So that is the negative sentiment, negative effect for those guys.
Okay. All right. We take your point, Chandan, and we'll come back to you with more questions on this. Prakarsh, wanted to also discuss with you the weekly expiry that has been launched for mid-cap index on Wednesday. Will you see an increased volume because of that?
if you see, definitely it is going to have a positive impact. Earlier, it was only Nifty and Bank Nifty which was trading, and that contributed almost 80-90% of the exchange volume. But over the last few months, Fin Nifty has also come up with a separate expiry day, which is on Tuesday. So that has had a good positive impact on the volumes. I think the rise of mid cap and with a separate day of expiry will definitely have an impact on the volume, but it will take some time because they're just introducing. It will take a few months, but I think it will definitely have a positive impact.
Okay, all right. Chandan, I don't know how much you would probably be able to talk about this aspect, but I'm sure you have been discussing with your industry peers as well that this particular move on the STT could actually have, the impact could be FPIs relocating to India to save tax. Is that something that people are discussing? Is that something which your peers are talking about?
Yeah, exactly. Even I believe the same talks are going on. So if I just look at the OI activities, if you remember or if you notice, in India versus SGX, the same kind of open interest remains intact. If you look at the SGX Nifty open interest, that is near to 2.5 lakh contracts. And in India, current month future contract also same. So you can understand the same kind of open interest prevails there. So definitely this will discourage to the FI contribution to the Indian trading system. One side, the government is looking more FPI to come and trade in the India, but such kind of act might discourage their interest, might discourage their activity into the Indian market.
All right, Chandan, just before we let you go, we'll ask Prakarsh a couple of questions as well. Prakarsh, just for bookkeeping, how much of your volumes come in from futures and how much of them come in from options?
For us, a majority of our volumes, almost 90% of our derivative volumes is option volume. If I look at comparative volume between future and option, so for us 90% is options, and on of the options it is predominantly index options, both Nifty, Bank Nifty, and Fin Nifty.
Okay, also Prakash, the industry leaders are saying their volumes are going back to pre-COVID levels. Are you also seeing the same trend?
There is the volumes of cash market is definitely going down. If you look at, we were at almost 40,000 crore kind of a volume, almost we have reached 50,000 crore daily turnover on the cash segment, retail side, which is now down to around 22,000, which is predominantly the same level which we were at COVID, before COVID. But in derivatives, the volumes have gone up almost by 3 to 4 times. So the impact of the impact on the cash market is same as pre-COVID level, but impact on the derivative is not in pre-COVID level. It is much more than what it is.
Okay, all right, Prakash, as well as Chandan, thank you very much for joining in and speaking with us and discussing this issue. I'm sure we will